Hi everybody and welcome to the Christmas edition of Ascentis TV, where you can see no expenses being spared. I'm joined as usual by Mark Overend from Tax.
Hello.
And Lee Kaznowski from Financial Mastery.
Morning.
Today we're going to be covering an update on the government support, and we're going to be touching on Financial Mastery and its importance as well. So to lead us into the government support, I'm going to do the charts. And in reverse order, as is tradition. Number 6, the Future Fund, they have given out 900 million. At number 5, the large CBILS, that's large business CBILS, 4.7 billion. Number 4, the self-employed income scheme, 14.5 billion. Number 3, CBILS, 18.5 billion. And it's a non-mover at number 2, which is the BBILS, that's the 50 grand job, 42.2 billion. And stuck at number 1 still is JRS, 43 billion. So Mark, straight into that, what's going on with JRS? Because it seems to be just getting more and more complicated.
Well, it is, yes. It has been extended further since we last recorded. So now the JRS scheme runs until 31st of March 2021. And we are thankfully going to keep the same rules until then, as far as we know. So we are still on the rules that existed back in August, where you can claim for 80% of your employees' wages. It's capped at £2,500 per month per employee, and you now must pay your employers and national insurance and your employers' pension contributions. You can't claim for those. The scheme extension means that there has been some changes in terms of who is eligible. So anybody who was on your payroll now prior to 31st of October can be furloughed from any point from the 1st of November. So that's brought a lot of people, a lot of staff into the scheme that were previously excluded.
Prior to that it was March, was it?
Yes, so you had to be, originally you had to be on the payroll prior to 19th of March 2020 right, in order to qualify for all the previous ones, but from 1st of November they brought that forward, so a lot of new employees can now qualify for furlough.
Is this for businesses that even started after March? So you could have started a new business when the lockdowns eased around July time. And you now qualify for the new scheme.
That's right, yes. As long as you'd made an RTI submission prior to 31st of October 2020, okay, then any staff included in that RTI submission can be furloughed from the 1st of November.
Okay.
So that brings a question about reference pay then, because previously it was the pay before 29th of March or whatever the date was. So what's the new reference period and pay?
Well, yes, you're right. So obviously there's a lot of staff that can now be furloughed who don't have reference pay prior to 19th of March, which was the old rules. So there are now 2 sets of rules for reference pay. So if
don't get too complicated.
No, I'll keep it. I'll keep it. Try and keep it short. Basically, if you were an employee employed prior to 19th of March and you've previously been furloughed, or even if you haven't previously been furloughed, the old rules still apply. So your reference pay is still what you were paid back in February 2020.
Yeah.
If you've come onto the payroll since that point, and so you're a new employee since 19th of March, then your reference pay is what you were paid in October, if you were paid during October and you were salaried. Or if you're on variable pay, 0 hours contract, hourly paid staff, then it's an average based on what you've earned since you started up to the 31st of October.
Right.
Now that does create a bit of an anomaly for anyone who's had a pay rise. That is excluded if you were employed prior to 19th of March. And also for the hourly paid staff, obviously we had a national minimum wage increase on the 1st of April.
Okay, does that count?
Not if you were included prior to 19th of March. So if you were on the old national minimum wage rate, then you still are for furlough pay.
What about if you joined after the national minimum wage went up?
That's where the anomaly arises. You qualify on the new national minimum wage rates.
All right, that will go down probably popular, won't it, amongst people in the same group and the same amount of pay?
If people are trying to compare what they've been paid through furlough and they've both been fully furloughed for November, then yes, people who were employed prior to 19th of March compared to those after will have a difference.
I know from seeing the scripts for this that the rules are horribly complicated and beyond what would be useful to explain today. Where should people go if they want that more granular level of detail?
Well, HMRC have updated their online CJRS calculator. It is very good. And if you put the correct data in, you'll get the correct answer out.
Right, good.
More often than not.
Just straight to the Inland Revenue's website and
If
JRS calculator.
If you Google CJRS calculator, the link for HMRC will come up. I would recommend putting your calculations through that. You can actually print and save it gives you now, the calculator is developed over the months that we've been using this scheme. The calculator will now, once you've got a result, it will tell you how it's arrived at that result.
Right.
You can print and save that, because if you get HMRC inquiry in the future, you can then use it as evidence.
You can rely on that.
You can rely on that evidence to say, this is how I got to my reference pay and the calculated amount.
Okay. Do we need to any more detail, or is that about the right level here? People really should head off to the Inland Revenue's website.
Yeah, or get in touch with us.
Okay.
Any more detail, I think people are going to turn this episode off.
Got you. Okay, yeah.
I guess there's one other thing to raise about the JRS scheme. In the last episode, we were talking about the JRS grant that was still available. So that's not available now.
The bonus.
£1,000 bonus.
That was a bonus, yeah.
I
Sorry,
suspect
yeah.
it might disappear.
Yeah.
What's happened?
That's been scrapped.
Okay.
That was scrapped the day after we recorded the last episode, I think.
Actually, got some money on that.
So there was going to be, if you still had your staff at the 31st of January, then you were going to get £1,000 per employee in February.
Yeah.
That's not happening anymore.
gone.
That's been completely scrapped.
Okay.
And it's been done in a way that I don't think it's going to be resurrected again.
Yeah, we suspected that though, didn't we?
Yeah.
Okay,
Yeah.
Lee, what's happening on the deferment front? Have there been any changes basically, or is it pretty much as was?
No real changes. No, a little bit more information in terms of the VAT deferment. So they started to release some of the instructions that's going to happen. We've mentioned previously that it's going to be an opt-in situation. To do that, you're going to need a government gateway, your own government gateway. So if we file people's VAT returns, then those clients are going to need to actually log on to HMRC VAT and register their own gateway.
We can't do it.
I don't think we can do it at the moment. No,
Okay.
they've said that you'll need a government gateway to do that. So you'll be able to log on and opt in for the VAT deferment. You need to make sure all your VAT returns up to date. So not payments, but the actual returns. So you need to know how much you're deferring, obviously. It looks likely they're going to give you the option to defer it over two 11 months. So you can pick between 2 or 11 months. And
2 months or 11 months?
well, between 2 or 11. So any 2, 3, 4, 5, 6.
Sorry.
Yeah.
Got
So, and it looks like you're going to have to pay it by direct debit. So one of the criteria is you're going to set this up by direct debit.
Yeah, you'd expect that, I guess. Quite
So-
common with a lot of time to pay
Exactly,
arrangement schemes anyway.
Yeah.
Yeah.
Now they have mentioned that you can have the VAT deferment and a time to pay in place still. So if you've got previous time to pay, it's not going to exclude you from this.
Okay. Any other more updates on deferments?
No, I think that's going to be enough for now.
Okay, well, we'll return to those if there are any changes. Okay, so we're also going to talk about the local government grants. Okay, so in the last episode we covered the grants that were available in November, similar to the local government grants that were made available to us back in March, April time. And the rules around the November grants were based on the local restriction support grants scheme rules that were introduced for any businesses that were subject to tier 2 and tier 3 lockdowns. And we are back into those rules now as of the 2nd of December when we came out of our lockdown. The rules are quite detailed and I'm just going to give you a basic overview. There are 3 types of grants that are available. There's the open scheme, the closed scheme, and the ARG scheme, the additional restrictions grants. So, to qualify, you must have a product or service that is required to be provided in person and on premises. So that's basically why all pubs and restaurants have to close. And there are a number of specific exclusions. First of all, if you do not need to provide in-person and on-premise goods and services, like accountants and solicitors, which they specifically mention, you're excluded. You're also excluded if you close by choice, if you've been closed since March, i.e. since the original lockdown and you've not reopened, if you are in any kind of insolvency arrangement, if you've breached the state aid rules, and also this time if you are not closed consecutively for 14 days. So you've got these rolling 14-day cycles that you need to be closed for. The grants are the same as before, so it's if you've got rateable value, forgive me, up to £15,000, then it's £1,334, and then it goes right up to £3,000 per month if you've got a rateable value of £51,000 or more. That's the closed scheme. Okay, the open scheme, the eligibility of this is going to be assessed locally. And so each one of your local councils will have their own application process. So it's going to be a much more of a narrative description as to why you're affected. And the grants they're about 2/3 of the closed scheme grants. So they're based in the same way. They're based on the rateable value of £15,000 up to £51,000 as before. The third grant that's available from local government is the Additional Restrictions Grant, the ARG grant. Now, this is aimed at businesses that are severely affected or even forced to close because of somebody in their supply chain. So this typically, a good example would be, to pick on the pubs again, this would be a brewery that's forced to close because of the, not directly forced to close, but can't operate because of people further down the supply chain that are forced to close. Also covers people in the events sector and those with non-rateable value. So people, for example, in serviced offices. So links are below. Jump onto the website to get the further detail. 3 types of grant. And as I say, if you haven't already claimed for the November grant, then go to your local government website. I did one for my local rugby club in middle of November. Took me about 5 minutes to do, and it was really easy. Okay, so throughout the summer, in the video content that we did, and in the last couple of episodes of Ascentis TV, we have really laboured the importance of budgeting for your cash flow, taking consideration of all of the government support that's available, from the local government grants that we just talked about, to CBILS and BBILS loans, deferments, and so on. Really important part of overall financial mastery.
Yeah, and we keep mentioning this term financial mastery, so it's a really good opportunity to try and define that for our clients and for our audience.
Yeah, it's also one of our main departments here, so that helps us convey to anybody that's listening what financial mastery here means. Financial mastery basically is absolute control over the financial performance of your business, and most importantly, it's the language of financial mastery. So it's being able to speak to people articulately and confidently and knowledgeably about the performance of your business, and you're speaking to the stakeholders in your business. The stakeholders are people that are potentially going to buy from you, sell to you, work for you, and lend to you.
Yeah, and that's a really important point, because a lot of people don't realise the impact on their financial performance on the external stakeholders. They tend to refer to themselves as just the shareholders, and they're the only people that have an interest in that business.
No, it's more important than ever, especially with the transparency around credit checking agencies and how quickly somebody can understand the performance of your business. If they're making judgments about the performance of your business, you need to be able to speak the same language as them. And the excuse of I don't understand my financial statements anymore is not going to wash with these kind of stakeholders. And it is a language that you've got to speak. Quite often you hear people saying, when you show them financial statements, it's all Greek to me. You must be able to speak the same language of these stakeholders. And the stakeholders themselves are focusing on risk. They've got no upside in the business. They're not shareholders.
What can they lose? They're not going to gain anything. It's what will they lose if they invest in this company?
Am I going to get my money back? Yeah. One of the most important aspects of financial mastery for any business owner now is monitoring the performance of their business on a monthly basis in terms of profitability, liquidity, gearing, and growth. And it's those middle two, gearing and liquidity, which are the risk ones, that these stakeholders are interested in, and they have to have a really thorough understanding of what they are. In future episodes, we're actually going to take a deep delve into these different areas: profitability, liquidity, gearing, and growth. But for now, we're going to focus on the regularity that people get their financial information and what the consequences of not having accurate financial information are. So, Lee, you look after the financial mastery department. how often should people be looking at the management accounts?
Well, I mean, at its most fundamental level, people should have this information on an annual basis, but that's just not enough at the moment.
No way.
So really what they have to do is have all those metrics that we've talked about at the annual accounts, they have to have that available to them on a monthly basis, dipping into the financials every week, every day in some instances.
You can do that now with cloud accounting. The information is dynamic. Every time a transaction happens in the software, it automatically goes straight into your
exactly one of the advantages of having all these automated systems in place is that you put a sales invoice onto Xero or your accounting software, and it can appear on your insights information straight away.
What about how do we ensure that data is accurate? We've just talked about machines there doing quite a bit of the work. They're not perfect.
No.
What should businesses have in place to make sure that the data is accurate?
So the idea of it being accurate is it's just a sense check, really. Ultimately, at the end of every month, you typically take the end of the month as
How
the
can you
cut-off
systemize
area.
that?
So what we do for our VFO clients, though, our virtual finance office, the clients we do the bookkeeping for, we have a checklist. It's straightforward like that.
We call that a BKC, a bookkeeping checklist.
We do, yeah. And it's just applying these systems and processes that you need in business, throughout the whole business.
Give me some examples of what's going to be on that checklist.
Really fundamental but relatively straightforward things, really. Are all the sales invoices on the system? If they're coming from an external one. Yeah. Are all the costs allocated to the correct category in the accounting software? And then, almost just taking a step back and having a look at that balance sheet and making sure there's
balance, do the credit
anomalies.
card balances and all that
Exactly.
kind of
thing. Are there any anomalies? Accounts such as net wages, very rarely would they have a debit balance in them. You don't tend to overpay your staff. And just having that peace of mind that balance sheet or it's been checked to, in some cases, third-party verification, like bank statements or something straightforward like that.
Your monthly management accounts now should be as accurate as the annual accounts, really, shouldn't they?
Easy, yeah.
Okay, guys, so financial mastery, the language of business. All business owners need to speak it. They need to understand the financial statements, and those statements need to be accurate, and that is based on some kind of checking system. We've got what we call a BKC, a bookkeeping checklist, and latterly that is in the form of some automated software called Xavier, and that should produce at the end of, to be fair, your management account should be accurate on a as a minimum a weekly basis now. Mark, at the end of the year, or 1 month before the year end, all clients should be getting from their accountants a pre-year end tax planning meeting. What are the consequences for clients who lack that financial mastery over their business? What sort of problems do you run into, and what are the consequences?
Well, the problems are not providing for corporation tax or providing an insufficient amount for corporation tax, because whilst the corporation tax is due 9 months after your year end, it's a liability that crystallises in your accounts at the year end date and therefore is included in the accounts. If your financial systems don't put up a provision in those accounts during the year, you've been making decisions and drawing funds out based on inaccurate data.
Corporation tax is missing. It's the most common one, isn't it? And the consequence is they've spent the profits on dividends.
Yeah, well, the usual, most business owners pay themselves in dividends, which is a distribution of profits after tax. If you haven't got the tax in there, you might be basing your dividend decisions based on profits before tax. You could therefore have drawn out all your reserves that you need for your corporation tax and over-distributed your profits.
And then you got a legal dividend.
You can't declare a dividend if there are insufficient reserves in the accounts to declare it.
You then go into a director's loan account, overdrawn director's loan account.
Yeah.
And that's got tax consequences and reporting consequences.
Yeah, the directors who've drawn that money out either have to pay it back or they need to generate extra profits in the future to declare dividends that then are non-cash dividends. They're just paying back the loans that they've taken out. So,
any other instances apart from dividends that what are the top three, if you like, apart from dividends that cause misleading management accounts?
Things that I've seen, people putting credit card information into the system the wrong way around, overstating profits. That's just a data, manually importing data and just getting it the wrong way
expenses
around.
going as a receipt instead.
Yep.
Yeah.
Missing bank accounts from the system. So you create a new reserve account, start putting funds into it, or have income streams going into it, and you don't account for it. Modern day businesses, that could be in the form of a PayPal account as well, as a normal, HSBC or whoever bank account. Mm-hmm. And sometimes not putting your wages data in. All of our clients, we run the wages through Xero, and it automatically posts the journals. If you're using external software, you've got to make sure you're putting your monthly journals in. If you're just accounting for the cash going out, then you might have something on your balance sheet that looks like an enormous debit in your net wages account, and that looks wrong, and that's because you've not posted your wages journal and you've not got the costs in your profit and loss account.
A simple bookkeeping checklist would pick that up, wouldn't it, in terms of
so.
the review of the overheads to make sure they're consistent.
Yep.
Your wages are missing, they're sat on the balance sheet, you've got a problem. Look, we're going to do a deep delve into each of the aspects of profitability, liquidity, gearing and growth. It really expands on financial mastery in future episodes.
Okay, just some dates for your diaries this month, in no particular order. The CGRS claims for your furlough grants, they must now be submitted by the 14th of the month after the month in which you're claiming for. So 14th of December is the cut-off date for any November claims, and 14th of January will be cut off for any December claims. For any companies with a March year end, don't forget your corporation tax bill is due for payment on the 1st of January, so probably best to get that scheduled in before Christmas. For any self-assessment clients who haven't yet sent in their tax return information, we'd love to have that in before Christmas. January is a very busy time for us. The CBILS and BBILS loans, the bounce back loans, their application deadlines are currently set to the 31st of January 2021. So applications, obviously all the brokers are probably going to be on holiday over Christmas. Get those in as soon as you can if you're looking to extend any of those loans.
Okay, that's it for this episode of Ascentis TV, and that's it for 2020. Goodbye 2020. We'll see you in 2021. If there's any subjects that you've seen throughout any of the 3 episodes that we've done so far this year that you want to talk to any of us one-to-one, all of our contact details are in the foot of this video. But all it remains for us to do is to wish you all a Merry Christmas.
Merry Christmas.
Merry Christmas.
Bye.
Bye.